So very good morning everyone. Let's quickly go through the practice questions in your Ind AS one, which will be very handy for you. That is the presentation of financial statements. So first one is a company presents financial results for the 3 years internally for the purpose of management information every year. In addition to the general purpose financial statements, the aforesaid financial results are presented without furnishing the related notes because they are not required by management for internal purposes. During the current year, management thought why not they should prepare third year statement of P&L, also the general purpose financial statements, and it will save the time and will be available easily when management needs this in the future. So with reference to the above scenario, can management present the third statement of P&L as an additional comparative in the general purpose financial statements? If second one is if management presents the third statement of P&L in the general purpose as comparative, is it necessary that the statement should be compliant of Ind AS? Lastly, can management present the third statement of P&L only as an additional comparative without furnishing other components for financial statements? So very nice question. This is the question. Let's quickly see what is expected from you in this question. So if you see, first one is as per a relevant para of Ind AS 1, an entity may present comparative information in addition to the minimum comparative financial statements required by Ind AS as long as that information is prepared in accordance with Ind AS. This comparative information may consist of one or more statements referred to in para 10 but need not comprise a complete set of financial statements. So when in instances like this, the entity shall present related note information only for those additional statements. Next is as per 11 para of Ind AS 1, an entity may present comparative information in addition to the minimum comparative financial statements required by Ind AS as long as that information is prepared in accordance with Ind AS. That is it. Lastly, an entity may prepare comparative information in addition to the minimum comparative financial statements as long as that information. If you see, this line is repeatedly used in this particular question. So the compared information may consist of one or more statements referred to in para 10, but they need not comprise a complete set. That is fine. So when in these cases, the entity shall present related note only for those additional statements. So in these cases, even though if the entirely is not required, if that particular scenario is covered, then it is permitted by the para 38C of the standard. That is it. So next one is a company, while preparing the financial statements for year 2022, erroneously booked excess revenue of 10 crores. The total revenue reported in financial year 21-22 was 80 crore. However, while preparing the FS for the year 22-23, discovered that excess revenue was booked in financial 2022, which now wants to correct the financial statements. However, management of the company is not sure whether it needs to present the third balance sheet as additional comparative. With regarding to the above background, is it necessary to provide the third balance sheet at the beginning of the preceding period? Second, the company wants to correct the errors during the financial 2023 by giving impact in the current figures of current year only. Is this contention of the management correct? This is your second question. Now let's quickly see how we are to reproduce, because those are things that carries a lot of value in the exam. So first one is as per para 40A of Ind AS 1, an entity shall present a third balance sheet at the beginning of the preceding period in addition to the minimum comparative if, because this you need to reproduce as it is, if it applies an accounting policy. So what are the scenarios third balance sheet is required is if the entity applies an accounting policy retrospectively, makes a retrospective restatement of items in FS or reclassifies items in FS, and the retrospective application, retrospective restatement or reclassification as a material effect on the information in the balance sheet at the beginning of the preceding period. So in this case, management need to correct the previous year figures to correct the error, but they need not furnish the third balance sheet at the beginning of the preceding period. This is with regard to your second question. Moving on to the next question, that is the third question. XYZ is into construction of turnkey projects and has assessed its operating cycle to be 18 months. The company has certain trade receivables and payables which are receivable and payable within a period of 12 months from the reporting date, that is 31st March 2022. In addition to the above, there are following items or transactions which took place during the financial year 2022. First one is the company has some trade receivables which are due after 15 months for the date of balance sheet. So the company expects that the payment will be received within the period of operating cycle. Next is the company has some trade payables which are due for payment after 14 months of date of balance sheet. These payables fall within the period of operating cycle, though the company does not expect that it will be able to pay this payable within operating cycle because the nature of business is such that generally projects get delayed and payments from customers also get delayed. Lastly, the company was awarded a contract of 100 crores. As per the terms of the contract, the company made security deposit of 5% with the contract value of the company. The contract is expected to be completed in 18 months. Therefore, the deposit will be refunded after 6 months from the date of completion of the contract. Next is the company has given certain contracts to third parties and received security deposits. So then so in this case the company does not expect the cancellation of the contract. So considering all the above items, the company wants to present the trade receivables as current despite the fact that they are receivable in 15 months time. So the decision of presenting the same is correct. Next is the company wants to present the trade payables is not current. And next is, can the security deposit made by the company be present as current? Next is, can security deposit of 2 crores received by the company from contractors be presented as non-current? So these are the various scenarios. Now let's quickly see how the presentation is. So third one is, it is fine, but additionally the company also needs to disclose the amounts that are receivable within a period of 12 months after 12 months from the reporting date. And next is, the company cannot disclose these payables are not current, and the company also should disclose that are payable within 12 months and after 12 months. So if you see first and second, the key classification is within 1 year, after 1 year. That bifurcation is very, very important. Next is because the amount will be received as the operating cycle, so hence it is not permittable. And also fourth was also it is not order because the balance, because the amount may be required to be paid before completion of the contract in case the contract is cancelled. That is why you need to pay attention to every line of the problem, because even if you not prepare this kind of questions, the question itself will give you an hint on how to arrive at the answer. Moving on to the next question. This question was asked in November 24th, so all the way more important because it's been 2 years this question has come. Is offsetting permitted under the following circumstances? First one is expenses incurred by holding company on behalf of subsidiary, which is reimbursed by the subsidiary. Whether in the separate books of the holding company, the expenditure and related reimbursement can be offset. Next is whether profit of on sale of asset can be set off against the loss on another sale, whether they can be offset. Next is when services are rendered in transaction with the entity and services are received from the same entity in two different arrangements, can the receivable and payable be offset in such scenarios? This is regarding to the fourth question. It was asked in November 2024. So if you see in this, as per para 33 of Ind AS 1, offsetting is permitted only when offsetting reflects the substance of the transaction. That is very, very important. This is minute terms you might be not reproducing the exam. So I repeat, it's permitted only when the offsetting reflects the substance of the transaction. So in this case, the arrangement or agreement, if any, between the holding and subsidiary needs to be considered. The arrangement is to reimburse the cost incurred by the holding company on behalf of subsidiary. The same may be presented on a net basis. It should be ensured the substance of the arrangement is that payments are actually in the nature of reimbursement. That is very, very important. The last line, I repeat, it should be ensured that the substance of the arrangement is that the payments are actually in the nature of reimbursement. Next is, as per relevant para of Ind AS 1, it requires an entity to present on a net basis and losses arising from group of similar transactions. So hence the gains or losses arising on disposal of various items of PPE, it shall be present on net basis. However, the gains or losses should be present separately if they are material. That is the catch. So in case of the material, they should be present separately. And moving on to the last one, Ind AS 1 prescribes the assets and liabilities, income and expense should be reported separately unless offsetting reflects a separate transaction. So in addition to the para 42 of Ind AS 32, there is a financial asset and financial liability should be offset if the entity has a legally enforceable right to set up and offset the entity and intends either to sell on net basis or to realize and settle liability. So in this case, the receivable should be offset against each other, and net amount is present in the balance sheet only if there is a legal right to set off. That is very very important. So otherwise, they should be reported separately. This is regarding the fourth question. Pay full attention. Note on the key terms because this was asked. Now I'm repeatedly telling it. It was asked in November 2024. So moving on to the next, that is the fifth one. Be very careful